Yeah, I'll give you a stat that our research house was talking about with Nvidia. They said to justify the current share price, Nvidia needs to grow 20% a year for the next 20 years.
Welcome to Checks and Balances, brought to you by Lighthouse Financial. I'm Michael Vincent, that's James Blair, and today, is Nvidia the worst investment at the stock market at the moment?
We're back in your life and we're doing something a little bit different today where we're talking about an individual company. Now, there is not many companies that would make that list. Nvidia though, Mike, a lot of hype at the moment.
Yeah, look, there's been a lot of hype for quite some time now. And again, some of it is definitely justified. You know, they make computer chips and processing chips that are needed for artificial intelligence. There's a huge boom in artificial intelligence at the moment. But really, the hype around this company is not because of what they do. It's because of their stock price and the trajectory that the stock price has been on over the last few years.
Absolutely. So the chips that Nvidia are producing, graphics processing units, GPUs, are essential for artificial intelligence. So obviously AI is the future. There is a lot happening in that space. There are a lot of the Magnificent Seven companies that are pouring billions of dollars into this industry. It's a race to see who can get market share. It's fueling, the chips are fueling that AI movement.
Yeah.
Mike, there are other AI companies though, right? It's not like they're the only one in this space.
100%. Just quickly though, favorite flavor of chips, what are you going with?
I like a sweet chili kettle chip.
Oh, really? I'm already salty, man. Plain Jane.
Do you go with the dip or no dip?
Well, if you're going dip, the chip has to be plain.
Yeah.
If you're sweet, like
of course. Of course.
Yeah.
I'm not a serial killer.
Anyway, back to the real chips, right? So, yes, there's a lot of competition in the market around this space, right? And it will continue to grow because basically where there is a gold rush, miners will follow. So people will start to build more of these chips and it will diversify away from the concentration on Nvidia. However, data centers all over the world have been buying Nvidia chips to power their AI applications. And there is an amazing fact around their employees, James.
Yeah, that's right. So I'll give you a stat first and then I'll tell you about the employees. If you invested $10,000 in Nvidia 10 years ago, it would be worth $2.2 million. Now, when you are an employee for a company, they might give you some stock options as part of your incentive package. Well, Nvidia does like to do that. And there is a stat around it. 78% of employees at Nvidia are millionaires.
Yeah, which is an amazing fact, right? And again, there is a lot of reasons why this company has, outperformed its competitors in the market and has justified a lot of attention and investment. My issue though is that with these things, it's when the fundamentals divorce from the stock price and it just becomes a hype train. And I think that has definitely happened with Nvidia. So if we talk about the case for the real value of the underlying stock though, think about its profits, right? Revenue's grown 200% year on year because of demand in the AI space. It is the largest manufacturer in this space, right? And a lot of companies are investing in Nvidia to try and pump it up and get more chips to power the AI stuff. AI demand, we know it's not slowing down, right? Companies are still pouring billions into AI research. We've got different competitors that can perform the same type of outcome using less processing power.
They claim that they can. That's the interesting thing, which time will tell. They are the reasons why the company is doing well, might be worth the value. 200% year-on-year revenue growth is one hell of a number. However, if we were to argue about the hype, the first one is that the stock price is growing faster than its earnings. There is the case that there is just all hype. People are going, this is the future, and they're just pouring cash in, but the numbers are not supporting it.
Yeah, but you can say that about a lot of companies in the tech space. And this actually happens when there is a bubble in the market in any space, right? And we saw it with the dot-com bubble in the 2000s. Now we've got that potentially an AI bubble. And, this is where you get some real fundamentals where, the stock itself and the company itself to pay you back the price that you have paid for its share has to perform at some ridiculous level for such a long period of time.
Yeah, I'll give you a stat that our research house was talking about with Nvidia. They said to justify the current share price, Nvidia needs to grow 20% a year for the next 20 years.
Yeah.
Now that is, like, in terms of compounding growth, a very big ask to justify the price today, which when we talk to P to E ratios, price to earnings, so the value of the stock versus the revenue, the return it's producing, it is completely out of whack.
Yeah.
And it is definitely a future focused number of going what we think this company will be worth in the future.
Yeah. And I mean, when we have kind of a new and emerging industry, there will always be players that come out at the start and look like they're going to dominate. And for everyone out there who thinks they've picked an absolute winner with Nvidia, I will take you back to the early 2000s. You picked up a mobile phone in your hand. Who was it, right? Motorola, Nokia, Alcatel. Where are any of those companies now? You have no idea who is going to dominate over the long term in a space. And just because they are the first there does not mean they will be the biggest. If you looked at me, if I looked at you in early 2000s and said, no, mate, Apple is going to be the phone that most of the world is going to be holding in their hands, you would think I was absolutely insane.
What about the BlackBerry? The BlackBerry
with the keypad.
It had so much momentum. I remember
beautiful movie on the BlackBerry story.
I have seen
it's
that.
So
yeah.
good. Yeah.
The interesting thing with the BlackBerry was there was a period of time where they were in all the corporates across the world, and people were like, we want iPhones. And they're like, iPhones don't have the security protection that you need. And everybody had a BlackBerry. And you just look at, there's so many companies in history when, you think about Kodak, you think about Blockbuster, you think about Nokia, you think about BlackBerry, where they had it. Yeah. They had it and they dropped the ball. Another interesting one was Blockbuster. So Netflix went to Blockbuster in the year 2000 and said, why don't you buy us for $50 million? And they laughed them out of the room. Netflix valuation today, $150 billion.
Yeah. Blockbuster valuation today?
None.
Exactly. Yeah.
I think they do have somewhere.
They have one store.
Yeah. But it's like more of a tourist attraction.
Yeah,
I think you can actually pick up a DVD.
Yeah. So, I mean, all we're talking about here is you've got fundamentals versus the hype, right? And we have natural trajectories that each industry and bubble follows, right? And, if we look at Nvidia's stock recently, James, is it still growing at the same rate or has it dropped off?
So from its peak, it's dropped 27%. In the last 5 days, it's dropped 7%. Over the last month, it's dropped 18%. So there is some volatility happening. You might go, what is going on? Well, there is the assumption, and I've heard the founder of Nvidia talk about it. They have this whole thing that going, even if companies offered free chips to our customers, they would still pay for our chips. Now, the question is that actually true, or are there competitors that are close?
Yeah.
And there is a competitor, Mike, that is starting to make some noise, which had the result of the share price dropping. So DeepSeek, which is a Chinese company, has come out and gone, hey, we can build chips and they're just as good. The big thing, there's a few things in here which have quite a bit of complexity. Geopolitics. So China does not want to be dependent on Nvidia. Why? They're an American company.
Yeah.
The focus on AI, you think about AI not just in terms of corporates and day-to-day life, the impact, but when we're talking about
defense
contracting, it has some huge impact. So obviously China and US are the relationship status is it's complicated.
Yeah.
So I don't think they want to be dependent on each other. And like I said, they do claim that their chips are competitive. And if that is true, Nvidia's share price is based off they are the one and only, they have the monopoly.
Yeah, absolutely. Right. And again, we see this with everyone at the start of every industry. Someone comes out as the major leader and then the competitors slowly catch up and then eventually often take over as their product is, cheaper and better. So we've discussed Nvidia in a bit of detail here. What is a smart approach for investors though? If I'm looking at jumping on the Nvidia train, and again for people, here's a question, James. How old do you think the company Nvidia is?
Oh, I mean, I've been hearing about Nvidia for the last couple of years, Mike. So I assume they were an overnight success. This
company was started in 1993, right? So for everybody who's like, I'm going to pick the next Nvidia, if you had, you've got to remember that these companies, trying to pick them is such a gamble. You are literally just gambling with your money. And the stat, if I invested $10,000 in Nvidia, I'd have $2 million now. You wouldn't. You'd sell it as soon as it doubled to $20,000 like every other rational investor. It is very difficult to pick these stocks and hang on for the long term.
Yeah. So the question of what do you do, the big thing is this comes back to, do you have a disciplined approach with finances, or are you trying to get rich quick? And I think when a lot of people are talking about Nvidia and they're not actual investors day to day, they're just trying to get rich.
Yeah.
The thing is, if you invest into Nvidia right now, you're not going to get the 10,000 that turns into $2 million over a period of time. You need to go and find the next Nvidia that is going to deliver you that return. And good bloody luck trying to work that out.
Yeah, 100% right. And again, it is just people, in my opinion, looking for get rich quick schemes when we're looking at this. And if you are, you have missed the hype train on Nvidia, I would say I don't think it'd be worth kind of pouring any direct investment into.
Yeah, so my big thing, which we've talked about many times on this podcast, if you are an average Kiwi who just has a good income and you're not a day trader, you're not trying to get ahead like that, do not muck around with picking direct stocks anyway. Yep, you might make a lot of money, but the stats say that day traders lose money. So you should be investing into a well-diversified fund. Before you do that, you should have an emergency fund. And then before you invest into shares anyway, you should still pay off your mortgage. Investment property for a lot of people can be a good option while they still have a mortgage in place. They are our key findings on Nvidia. I am very keen to know what people think. And if you've enjoyed this episode, which is a little bit different, let us know. What is the next company that you want us to do a little bit of research on?
Give me your next moonshot pick. Tell me what I should invest in, which is going to give me a 5,000 return.
Yeah, the other, just to give you an idea of what we're thinking about, do you want us to do a Magnificent Seven episode instead of just Nvidia? Because the Magnificent Seven in total have had $759 billion loss in market capital over the last little while, which that is such a big number, Mike.
Yeah, it is. But that's what happens when you play the markets.
That is. But you know what doesn't play the markets? Taking control of your financial future, subscribing to Checks and Balances, giving us a review, giving us a like, and we'll catch you next time.
Cheers.
Oh, I like the laptop swing.